Corporate Finance Excel Practice Problem. In this presentation, we're going to work a practice problem in Excel related to the use of ratios to create the balance sheet. In other words, we're going to start with the ratios, creating the account balances that will then be used to create the balance sheet. Get ready. It's time to take your chance with Corporate Finance. Here we are in Excel. We have our information on the left-hand side. We're going to put that information into the blue area into our worksheet on the right-hand side, calculating our amounts, our ratios, and then using the balances to calculate or fill in or populate the balance sheet. We're going to be doing such stuff in the reverse order, or calculations basically in the reverse order. In other words, we will be starting with the ratios, then calculating the account balances from them. And so typically we would think of us basically having the financial statements, creating ratios from them. Now we're going to have the ratios creating the balance sheet. Now you could think of this happening in practice in that you might have one period, for example, that you take the ratios from, and you might use those ratios perhaps to do some types of estimates or projections and basically create components or parts of the balance sheet or income statement for a future period as a type of projection. It's also really useful to do this going two ways, because you're kind of deconstructing what you normally think of as doing. In other words, we typically think of financial statements creating the ratios from them. If we think about the ratios then creating financials from them, then we're basically deconstructing. We're doing this thing from both sides, helping us understand it better. Also, it's very typical for test questions to do this kind of deconstructive type of question, because it tests your knowledge on it. So don't just think that if you're working on a test on this, that they're just going to ask you, for example, just give us the total asset turnover and just give you the information to calculate it straight out. They're going to make you back into certain numbers and whatnot. So you got to get used to doing it for tests if that's your main purpose as well. Okay, so we got our information on the left. We got the total asset turnover. We got the cash to total assets. We got the accounts receivable turnover, inventory turnover, current ratio, debt to total assets, and the sales number. So note that as we start thinking about the balance sheet, you might start to think of this situation. If they ask for a balance, for example, if we say, hey, accounts receivable is on the balance sheet, how can I then use these numbers to then create the accounts receivable? In other words, we might start with the ending number and try to basically look at these ratios to see how we would use them to calculate that balance, then possibly doing the math in our head to do the algebra to write it out in such a way that we would calculate the balance. What I would suggest then, and if you could do that, if you could visualize that, great, do that. But if you can't, and a lot of people are going to have to do more of a couple step type process, which would mean let's take the ratios that are given, let's write them out in the format that we know them, and then see if we can break them down to simply one unknown. Once we identify the unknown, then we can write it out algebraically and solve it algebraically. And that way, you're not doing everything in your head. You're just remembering the formula you need to remember, writing it down in the way you see it in your mind, and then reformatting it once it's on a piece of paper to an algebraic format with one unknown that you can then solve for. So let's break this down. We can say, okay, the total asset turnover, what does that consist of? I'm going to write it down the way I know it. I'm going to say, all right, we got sales, and then we got the accounts receivable. Remembering that we have sales, income statement account, and accounts receivable balance sheet account. Therefore, we might have a term saying average accounts receivable. So just be aware of that. Depends on the context of the problem you are talking about, as we've seen in the past. That'll give us the total asset turnover. So we have the sales number. They gave us that. These are credit sales. All the sales are credit sales. We don't have the total assets. So I'm going to say that's the unknown. I'm going to make that yellow, but they did give us the end result, that being the total assets turnover, that being the 1.8, was it? Yeah, 1.8 times. Let's add some decimals. Home tab font group will add a decimal, 1.80. So now I need to back into the total asset. Now you could probably just see how to do this. But again, if you don't, and I would still just write it down when you're doing this division and multiplication algebraically and then solve for it. So algebraically, it would look like this. 678,000 divided by x, the unknown, is going to be equal to 1.80. 1.8. So you can then solve for that. I'm going to use the goal seek to practice this, because I think it's a useful tool. So I'm going to delete this to do it. I'm going to say this equals this number divided by the unknown. And now notice I cannot have the system saying, hey, look, you can't divide by 0 is what it's saying. We can't have that to use goal seek. So I'm just going to put any number here. I'm just going to say, well, what if it was 1,000? And then I'll change it to what it needs to be. So then we're going to go to the Data tab. We're going to go to the What If Analysis. We're going to go to Goal Seek. Goal Seek. We're seeking a goal here. And then we want to set this cell to be what we know it should be, 1.8, 1.8, by changing the yellow cell. And then we'll just let it do this by the process of elimination. And so there we have it. Now then you can double check it. So whether you did it with goal seek or you did the algebra, then you can plug it back in and double check it. This equals this number, the sales divided by the total assets. And that's going to give us this. I'm going to add a decimal. So there it is, 1.8. Looks good. So now we've got the accounts receivable. When we start to construct our balance sheet, we got the accounts receivable. That's good. So we did this one. We kind of looked into that and say, let's mark it off. Let's make it green because that means it's done. Then we got the cash to total assets. So cash to total assets. So whenever we see a ratio such as that, it's just that comparison. It's just, that's going to be the division problem. Cash compared to total assets, cash divided by total assets. So we're going to say cash divided by total assets. This is like a vertical analysis on a balance sheet. We would be comparing everything on the balance sheet to basically total assets, just like we did in the income statement. We saw vertical analysis comparing everything to the sales item. So we're then going to say, okay, then the cash is the unknown. So I don't know what cash is, but we do know what the total assets are. The total assets we just calculated up top, and that's going to give us our cash to total assets. So we'll do the division problem. So I would then let's say that we know this number. Cash to total assets is 1.7%. Let's make that a percent. Go into the Home tab, numbers percent, add some decibels. Then we can write out the algebraic problem. So I'd solve for the unknown or find the unknown, then write out the algebra. X divided by 3,76629 is going to be equal to, I'm going to make this back into a decimal, 0.017. That would be the decimal, 0.017. Now let's do this with goal seek. So I'm going to do it with goal seek. So that means I'm going to delete this. And then I'm going to say this equals this number, the unknown divided by this number. Let's use goal seek now. I'm going to click off the cell, go to the Data tab, go to the What If Analysis, goal seek. And then we would like to set, I'd like to set this cell to be, and I'm going to use it, I got to do it in a percent. There's the percent, 0.017. Make it 1.017, please, by changing the yellow cell. Then we'll say OK. It'll record the calculation. Now we can double check it here, whether we did the algebra or we used goal seek to get to the 6403. We can double check it by saying this equals the cash divided by the total assets. Formatting this cell, we can actually, I can format paintbrush it from here. Home tab, clipboard paintbrush, and format paint it. All right, so that means we found this one. This one is done. All right, and then so the next one we have is going to be the accounts receivable turnover. So accounts receivable turnover is typically sales or revenue. And these are all credit sales. So that's going to be our sales number, which they gave us that number. We divide by accounts receivable. Now remember, we're comparing something that is a balance sheet account, sales, and an income statement account, which is, an income statement account, which is sales, and a balance sheet account, which is accounts receivable. And therefore, you have a difference in the timing. The accounts receivable then sometimes might be given as average accounts receivable, which typical average beginning of the period plus the end of the period divided by 2. So just be aware of that depending on the context of the problem. The accounts receivable is the unknown for us. So I'm going to put the yellow here indicating the unknown, and that's going to give us the accounts receivable turnover. The accounts receivable turnover, which will be then 8 times. So that's the known. That's what we have up top. So then we can write down our algebra now and do it algebraically. It would be 678000 divided by x would be equal to 8. And then we can solve for it. Now let's go ahead and do our goal seek to do so, and you can do the algebra and or the goal seek. So I'm going to delete this. This is going to be equal to the 678 divided by the yellow cell. Now it says, hey, you can't divide by 0. That's what this thing is telling us. And so what I'm going to do before I do goal seek is I'm just going to put an arbitrary number in here. I'm just going to put 100 just to have something in there. Then I'll click off the cell. I'm going to go to the goal seek, which is found under the data tab, under the what if analysis and goal seek. Seeking the goal of, what's the goal you're seeking? We'd like to set this cell to be, what did we set? 8. By changing the yellow cell. By changing the yellow cell and OK. And it'll find that answer for us. Then we can double check it, whether we did the algebra or whether we used goal seek. We can then plug it back into the formula, taking this number divided by this number. And there is our 8. Let's do a little bit of formatting. I'm going to put an underline here, which is at the Home tab font group underline. I'll put an underline there. Home tab font group underline. Let's make this one green, indicating that it has been completed. So make that one green. Has been completed. All right, now we're on the inventory turnover. Inventory turnover. That can be calculated starting with sales, or it might be using cost of goods sold. Remember that you could have a difference between those two. We're using sales here. It depends on the context of the problem that you are working on, so be careful with that. We're going to divide it by the inventory. Remember, we're using these turnover ratios where we're comparing a income statement account and a balance sheet account, timing differences between those two forms, or those two financial statements. Therefore, you might have average inventory, depending on the formula, which would be beginning inventory divided by ending inventory, beginning inventory plus ending inventory divided by 2. Now, that's going to give us the inventory turnover, which we know to be 10. That's going to be 10, the unknown then being the inventory. Let's go ahead and calculate that. Let's do our algebra. We would write it down as 678,000 divided by x is going to be equal to 10. Now we're going to use our goal seek to figure it. To do that, I'm going to delete the number. I'm going to then put in the formula. The sales divided by the inventory. I can't divide by 0 because it confuses Excel, because that's like, you can't do that. It's like, that's an unknown thing. So you have to put then 100 here, or something there. It doesn't have to be 100. Some number there for a placeholder. Then I'm going to go to the data tab. We're going to go to the forecast what if analysis goal seek. Goal seek. We're going to be setting, I'd like to set this cell to be what we know it should be, which is 10, by changing the yellow cell. Change the yellow cell, please. And then that makes the yellow cell what it needs to be. So whether you get to that 67,800 by the algebra or by goal seek, we can double check it by taking then the sales divided by that 67,800. And there's our double check. There's our 10. Let's put an underline here for formatting purposes. Home tab font group underline. Next item we have, well, let's make this green, indicating that it has then been completed. So now we're going to have the current ratios. Let's go to the current ratio. Current ratio is calculated by taking the current assets divided by the current liabilities, and that would give us the current ratio. Current ratio. So what have they given us here? They gave us the current ratio. We know that. That's going to be 1.86. So we know the bottom line number. Home tab numbers. I'm going to increase this. Now we don't have a current assets or liabilities, but we can make an assumption here. We could say, what if the only current assets are cash, accounts receivable, and inventory? So we're going to make that assumption that those are the current assets. So that means that the current assets then are going to be equal to the cash plus the accounts receivable plus the inventory. That's going to be the current assets. We don't know the current liabilities. That's the unknown. That's what we're going to back into with the current ratio here. So that's going to be the unknown. Let's write down the algebra, which would be 158,951 divided by x is going to be equal to the 1.86. Now we can solve for that. Let's do that with the goal seek, which means I'm going to delete this, put in our formula. This equals the current assets divided by the current liabilities. And once again, I can't divide by 0, so I have to put some placeholder, which I'll just put 100, standard placeholder for me. You can use whatever you want. I'm going to go then to the data tab. We're going to go to the what if analysis goal seek. And we want to say, would you please set this cell to be what we know it should be, which is 1.86, by changing the yellow cell, which has 100 in it, to whatever it needs to be. And we're going to say, okay. There it changes it out, so whether you get to that 85,455 with the goal seek or with the algebra, we can plug it back into the formula, double checking it. taking the current assets divided by the current liabilities, then formatting it. I'm going to use the Format Paintbrush to do so by clicking on this cell, going to the Home tab, clipboard paintbrushing it, and then paintbrushing that formula over. Let's put the underline here by going to the Home tab, Font Group, and Underline. All right, so now we've got the current. Let's mark that one off. Current ratio has been completed at this point. So now we're going to go to the debt to total assets. So that's one where it says something to something else. So it is what it is. That is the division problem. Debt compared to the total assets. So we're just going to say, all right, let's see what we have there. We've got the debt compared to the total assets is going to give us the ratio of the debt to total assets. And we know what the end result is. They gave us that. That's the 45%. That was given to us. Let's make that a percent. Go into the Home tab, Numbers, making it a percent. We also know, I believe, and it should be the other way around, shouldn't it? No, that's right. We also know the total assets. We figured up the total assets somewhere. That was up top here. So we got total assets when we did the cashed total asset calculation. So we have that now. So let's pick that one up. That's going to be this item. Actually, we picked it up when we did the total assets turnover, and then we used it in cash total assets. So either one, you can pick it up from either place. So there we have it. Now the unknown then is the debt. So the debt is going to be the unknown. We can then write the algebra, which would be x divided by the 376,629 would be equal to the 0.45. I've made it a decimal now. You could solve it algebraically now, or you can use goal seek. I'm going to use goal seek. This equals this number, the debt divided by the total assets. Clicking off the cell somewhere, going to the Data tab. What if analysis, goal seek. Seeking the goal of setting that cell to what we know it should be, 0.45. It's in a decimal format, so get used to obviously putting it in a decimal format as opposed to a percent format. And then by changing the yellow cell, and there we have it, does it. And let's, whether we get to that 169,483 by using the algebra or by goal seek, we can then go over here and plug that information in and see if we get to our 45%. So we can take the debt divided by the total assets, and then we'll make this a percentage. I'll do the paintbrush to do so. Home tab, clipboard, format painter, and then we'll paintbrush that on over, and we have the 45%. Let's see if there's any rounding to it. So it looks pretty even all the way through, 45%. Notice you could end up with some rounding differences, of course, whenever we're using these ratios. So let's go ahead and underline here. So I'm going to go to the Home tab font. We're going to underline here. Let's go back up top. We found the debt to total assets. We found the debt to the total assets. And we'll make that green. Now we've got a couple more here that we're gonna think about. Let's first start to construct the balance sheet because we've kind of found what we have, what we have been given, and then we'll see what we're missing and go back in and kind of put this thing together. So the balance sheet, we're gonna start with the assets, and we're gonna say we have current assets. So let's pick up the current assets, which it looks like we found cash here as a current asset. And the cash, I'm going to bring this to the enter column, is going to be that 6403. We found the accounts receivable. So the accounts receivable, that would be a current asset typically. The 84,748 would pretty much always be a current asset. And then inventory, we found the inventory. And that's in the wrong cell, but we found the inventory, which is here, and that's going to be a current asset, and we're going to say that those are all the current assets. So I'm going to say we have total current assets then, which are going to be equal to the sum of these items. So it's just sum those up. I'm going to bring in that into the outer column. This is indented by going to the Home tab, Alignment, and increasing the indent twice. I'm going to select these items and increase the indent once. Home tab, Alignment, increase the indent once. I'll underline this cell, go into the underline here. Now, typically, what we're usually going to have something fixed assets under that, right? Property, plants, and equipment, depreciable assets, we might call them. And so it doesn't look like we're not seeing the depreciable assets. I'm going to think about that as like one line item. Then we have the total assets. Now the total assets we do have. So the total assets we know are this 376,679. So if we know that, we can kind of back into basically the fixed asset amount, right? Because we got the current assets, we assume the other assets that we have are property, plant, and equipment, and we put that in their net of accumulated depreciation. We could just put that whole category basically here. So let's do that little calculation down below. We're going to say, all right, so I started to construct the balance sheet, and let's do a little calculation for the fixed assets, and let's actually call it a calculation for total assets, and we'll back into the fixed assets. So total assets, we're going to say, is composed of current assets and then the fixed assets. So then the fixed assets is going to give us the total assets. Now the current assets we figured out up top. This with the current assets. The fixed assets is going to be the unknown. So I'm going to make that yellow so we don't know what that is. But we know that the total assets is going to be equal to, we found that up top here, the total assets here. So that means we have the unknown there. So we can say, okay, let's do our algebraic equation, which is going to be the 158951. And this is going to be plus x is going to be equal to 376629. And then we could do the algebra, or I can do the goal seek. So let's do goal seek. So I'm going to delete this. I'm going to put in the equation, which will be this current assets plus fixed assets. Then click off the cell, go to the data tab up top, what if analysis, goal seek. And then we're going to say, I'd like you to change this cell to be what we know it should be, which is this 376629, by adjusting the yellow cell. And we'll say, okay. And then it's going to do that for us. So that looks good. I'm going to say, okay. We can double check it down here by saying this is going to be equal to this plus this. And then I'm going to make this blue, right clicking on it and make it that blue there. I'm going to put an underline here, home tab, font, and underline. All right, so if we go back up, I'm going to say, okay, now the total assets, we're going to say the total assets are going to, the fixed assets are going to be equal to this number, so that these two numbers, the current assets and the fixed assets, add up to then the 376,629, or the total assets. So we're going to say, okay, that makes sense. Then we're going to go to the liabilities. So let's go to the liabilities, and we'll have current liabilities, which is going to be the current debt versus the long-term debt. So the current debt, the total debt we have here, we've got the total debt, and we need to break it out between the current and long term. So let's see if we can do that calculation down here. I'm going to call this, let's call this total debt. And the total debt we're going to say is going to be equal to the current liabilities, and then the long-term debt is going to be the total liabilities or the total debt. And that's going to be the total debt or the total liabilities. So we'll pick that up, and so we're going to say, all right, the current liabilities we picked up here, the 85,455. The total debt, I believe, was given. We get the total debt. No, we got to the total debt here. So we picked up the total debt here in the debt to assets. So we got the debt there. So we can back into the long-term debt then, making this yellow. And so then we're going to say, all right, the formula then is going to be 85,455 plus x is going to be equal to 169,483. Then we can do the algebra. I'm going to do the goal seek to do it. I'm going to delete this, and this is going to be equal to this plus this. Then we'll take a look at our goal seek. So we'll go to the data tab. We'll go to the what if analysis and goal seek. And then I'm going to say, I would like you to set this cell to be the 169,483 by changing the yellow cell. And then we'll say, okay. And it'll then populate it for us. So we're going to say, okay, so there it is. I'm going to put an underline here. We can double check our calculation by saying this equals this number plus this number. And there we have our double check. Let's go ahead and make this yellow. So I'm going to make, or blue, put a line around it like so. So now if I go back up top, we can say, all right, let's go back up top to our balance sheet. And we're going to say that we've got the debt, the current debt now is going to be equal to the current liabilities, we'll call it, and let's just call it, we'll call it current debt. And then we've got the long-term debt, which we're going to say this is going to be equal to the long-term. So there we have that. Now, since this is current and long-term, I'm going to go ahead and put these both in the outer column. Let's put them in the outer column like so, and then that'll give us our total liabilities. So the total liabilities is going to be the sum equals the sum of these items. I'm going to put an underline here, home tab font, and then we'll put the underline, and then we'll pick up the equity, which is what we need. We're going to have to back into the equity. We don't know what the equity is, but we do know what the total liabilities and equity need to be because they got to tie out to the total assets here. Let's put a double underline up here, double underline. Let's put an underline here. So then we can do another calculation to figure that out. So we're going to say, let's do one last calculation. Let's do it in a little calculation down here for total equity. So equity, if we think about our accounting equation, assets equal liabilities plus equity. So that's our accounting equation. So if I take assets, and I'll just use the actual equation here because assets minus liabilities is a very common way to think about this. So if we just think about assets minus liabilities, we're going to be picking up the total assets, which we did up top, total assets, minus the total liabilities, which we figured here. Total liabilities, that's going to equal then the equity. This minus this is going to be the equity. And so we'll then pick up the equity. So I'm going to say the equity then is going to be equal to this item. And that means that our liabilities and equity equals the sum of the liabilities and the equity. And we'll put an underline here, and we'll put the double underline there. So this is kind of a rough balance sheet. We kind of summed up like the current assets and grouped them together there. But notice we can kind of construct a rough balance sheet basically from these ratios.